Hey stream viewers, if you're outside of the United States, I have a cool offer I want to tell you guys about thanks to our partnered broker, 8cap. 8cap is currently offering the ability for new depositors to get access to our premium tool, the Edge Finder, completely for free. Now, how this works is basically you create an account and deposit a certain amount of money into that account, and they will essentially buy the Edge Finder on your behalf. So it's a win-win-win. They get a new client for a reputable brokerage, you get access to the Edge Finder and a great brokerage to trade with, and you'll be supporting the show by signing up with 8cap. Now, here are the steps if you want to find out more about this specific offer, but make sure to follow them specifically as we list them out on the screen here. Step 1, navigate to a1trading.com/8cap. That's a1trading.com/8cap. Step 2 is to follow the instructions and to make sure you use the specific link on that screen to sign up for your new 8cap account. Step 3, complete the required deposit amounts and contact their team as instructed on the page. So if you're interested in finding out more about this offer, head over to a1trading.com/8cap, and we'll also be dropping the link to this down below in the live stream chat as we speak. Like I said, make sure to follow those instructions specifically if you'd like to get access to a free copy of the Edge Finder if you meet the deposit requirements as listed on the website. Full information, like I said, can be found a1trading.com/8cap. Now back to the stream. Good morning, everybody. Welcome back to another live stream. Happy Monday to you, and hope you are all doing well. We are back for another one, and we've got a little bit of a rebound here taking place in the stock market. You've got the S&P 500 here up about 1.1%. Nasdaq is up 1.4%. Dow Jones down 0.9%, and Russell is up 1.5%. So we are seeing, at least tentatively for now, a bit of a bounce on this market. We also have oil off 4% here this morning to the downside. So we did briefly gap higher here on the open, but you can actually see oil price closing the gap pretty quickly and actually now fading into the New York session here. So maybe a little bit of a cleanup there. Is the audio out of sync? Let me know, guys, if we are okay, if everything is, if I sound okay, let me know. Let's see what today brings. S&P 500 here is pressing upwards here into the New York session. Of course, the U.S. stock market is 27 minutes away from opening up. We'll see how that plays out. You have to remember that even if you don't trade, stocks, etc., knowing that 9:30 mark is coming is really, really important, because at 9:30 you have the New York Stock Exchange open up, and that typically drives a lot of volume into the market. So you can get a lot of moves, or you can get a lot of chop, right? Just depends. But the point is, the real volume comes online usually in the next 20, 30 minutes. So as that takes place, we could get sharp continuations or sharp reversals. And that's why a lot of people love to trade that, opening 30-minute candle or so here on the U.S. Stock Exchange. So we'll see how that plays out. Nasdaq also looking strong here into the open. Dow Jones is rallying here. I do still have my short position on. However, stops are in place here in case we do continue to drive higher today. If we break out of resistance here, then I am out of that trade. I will take my profits on that one and run to the next one. If I take a look, here is Dow Jones. So giving up a little bit of the gains here, you can see, again, we did gap higher here on Friday's trading action. And I don't know why TradingView does this, but every time I get back into my TradingView, it does these, it extends this thing, and I don't like it extended. I like it to stay over there. Anyways, I am still short the Dow Jones. I have my stop loss in place on this one in case I need to get out of the way there. So we will see how that plays out. But if price comes up here into this region, I'm perfectly fine with staying short on the Dow as long as you see rollover from these past levels of resistance. But if we're forming a double bottom here, like if we're going to bottom out in the Dow Jones and start to break higher, then I will not fight that, right? I will take my profits and run and move on to the next one. VIX is lower here this morning as well. This is also a positive signal. I like to see this, right? In terms of if you're going to get a bull rally in stocks, you also want to see the VIX, and typically these things are inversely correlated, but you want to confirm the move with a sharp drop off in the VIX. That's typically, when you're going to get some kind of follow through to the upside in the stock market. Most of the time, that is coincided with a big spike and sharp drop in volatility. So we'll see how that plays out. I listened to somebody talking about this, and actually, the more painful scenario is actually, in my opinion, a grind down in stocks. A lot of times when you get these sharp one-day drops, it causes these V-shaped moves, right? So we saw this type of one-day stock market drop, and oftentimes that peak fear kind of actually capitulates, and then we see the market bottom. And we did see some more heavy selling on, Thursday and Friday. So perhaps we're seeing a little bit of a bounce back that could turn into something more. But I think from a constructive bullish perspective on the stock market, what you would want to see is you'd want to see these levels that previously held as support, but were lost as resistance now, right? So prices come back in, sellers have taken control of these areas. I think you want to start seeing those areas fail for sellers, right? So if price comes on up into this region, 6,750, 6,800, sellers want to see this area hold decisively to the downside, right? We want to see that continue to be the case. Hope you guys are doing well. Hey, Shirls. Hey, Prizrak in the chat. Ismail in the chat. CPR. Good to see you guys. Rodrigo, good morning. Thank you for being here. Hey, Nick, I'm an FX swing trader. Usually hold on to trades for 2 to 4 days on average. Entries on the 4-hour chart. Do you think the Edge Finder would be a good fit for me because I am not that much of a long-term holder? Yes. So the Edge Finder is not time frame specific. If it was to be put into a time frame, it's like the 4-hour and daily chart, but it's really not meant for a specific time frame because Edge Finder is not a strategy, right? This is one of the most common kind of misconceptions about Edge Finder is that it's some kind of buy now, sell now type of indicator. It's simply not that. It looks at technicals, sentiment, economic growth, consumer strength, inflation statistics, jobs market data, and it generates a scorecard, but that's just a report card on what we're looking at here. It doesn't tell you, oh, now is the time to buy or now is the time to sell. And it's been designed intentionally for that because we know we have traders who are swing traders, day traders, scalpers, long-term holders, position traders. We have traders that use Edge Finder for all sorts of different styles. And I myself use Edge Finder for both kind of a short-term swing trading side and longer-term position trading. I use it for both. So Edge Finder is not built for a specific time frame. And that is one of the most common kind of confusion points for our tool is, hey, is this giving me a signal for a 30-minute trade and it's not giving you a signal at all, right? It's not telling you buy this, sell it now. It's not doing that for you. And again, we do that intentionally. It's not some sort of holy grail magic box system. Edge Finder is meant, here is who it is really truly for. It is for somebody who has a general understanding of fundamentals, like they're interested, they're learning about them. They just want a tool that will kind of guide the logical thinking and track all of the data in one place to build a report card, to scorecard it all out for you and to keep things simple. And then to add that bias or analysis into your trading to help improve the insights that you have on the trades that you're looking to take, right? Edge Finder is not a holy grail and it'll never be sold as such. It is simply a scanning software, a really powerful one at that, but it's not a magic box, right? So yes, Edge Finder is perfect if you are a swing trader or a day trader or a position trader simply looking to add the macro directional bias that Edge Finder is screening for into your process as a trader. I hope that makes sense, but that is exactly what it's a confluence tool ultimately. So anyways, back to my thought process here on this. Lucky points out that VIX and the yields are lower on the day, which is good, right? You want to see yields relaxing a little bit. That's going to be, of course, right now it's very correlated to oil prices due to inflation. Right, what it insinuates about inflation. But if we look at the stock market, right, the S&P 500, what I would say is that if you are a bull, you want to see these levels get taken back from the bears, right? These critical spots where sellers were able to break through last week, right? And even retest and sell off once more. If you're bullish, you want to see those levels get taken back. And the other way you could do this is take your Fibonacci retracement tool from the high point here to the low. And this is really, that's your map right there, right? You want to see, in my technical analysis perspective, you want to see things like the 38.2, the 50%, and the 61.8% retracement be broken to the upside. You get that kind of move there. I think if you are aggressively bullish, you could be looking at like the 38.2 and looking for a breakout there. And if you're more conservatively looking for proof, that 61.8% retracement would be a more conservative guide. Of course, you would miss a larger component of the rally if that was to take place. But that's the type of move that I would need to see to really get more positive on indices. So going into this week, my bias would still remain, if you get rallies into these areas, as long as there is not some sort of resolution in the Middle East, some sort of call for a ceasefire on both sides, etc., as long as you still have that uncertainty there and oil prices remaining elevated, my concern here is that these sorts of moves would likely get faded into the week. So that is my perception on markets for now, subject to change. Meaning, if all of that is false and we break to the upside and we have some sort of ceasefire, some sort of cool off in oil prices that is sustainable, I will definitely drop the bearish case, right? So just a thought on that. I said it in my weekend video, and I'll say it again because I think it's a really good way of thinking about markets. The expression that I, like to think about when it comes to trading is hold on loosely to strong opinions, right? So I have a strong opinion. I think the stock market could continue to roll over. However, if I'm wrong about that, then I'm going to cut that loss and I'm going to move out of there, right? In this case, I'm not going to take a loss on the short side because I already have locked in my stop loss in profit. So I am short the Dow Jones. I mentioned this earlier. I'm still short Dow. DIA is the ETF that I'm trading to the short side. I can't lose money on this trade because I have chosen to move my stop loss into profit, which is, a nice spot to be in. Of course, I am losing something in the sense that I would be giving back probably $1,500 worth of profit that I had sitting right here. But that's something I am willing to continue, right? So I'm willing to take on that potential risk or give back on the trade that I have. There's always something at risk as long as you're in a trade. So in this case, I am risking giving back some of my profits, but I will still walk away with a profit no matter what, if this thing does rally. What about crude? Yeah, let's take a look at it. We did get some interesting data. Again, Sluggy hitting us with the economic data here this morning. Just something on the peripherals here. I was looking at it earlier this morning. The Canadian dollar here did have a better than expected CPI print. CPI came in for Canada at 1.8% versus 1.9% expected. The Canadian dollar a little bit weak here this morning against the dollar, for example. You can see dollar CAD, well, actually gaining some strength, I guess. It was weak against the dollar here on the 30-minute, but reversing course here. Perhaps that dollar coming in under some pressure. You do have dollar pulling back here a little bit, but let's take a look at oil. So these two things are kind of connected at the hip right now, in the sense that dollar is moving higher on inflation worries and yields rising. And so with oil cooling off today, you have a reversal in yields, the dollar and oil all at the same time, right? So let's see. Let's take a look at oil, and just from a momentum perspective, we have seen oil sharply move the other way. And I have some research I wanted to share with you guys on this oil move. So traditional economic theory that I learned about this weekend and wanted to share with the class is that it is usually a prolonged, and I've been talking about this on the channel, but a prolonged move above like 90, 95, 100. If you have a sustained oil price in this region, let's actually map this out. So let's go out and let's say this is at least my very basic understanding of, okay, well, let's say the first time we got above $90. So we've been teetering above 90. Let's go out and let's say, just bear with me for a second. I'm going to map this out. Okay, 90 days is going to be June 4th. So right around here. Okay. So what I have been seeing, at least from economists that are smarter than I, have been thinking or have looked at history and derived that, generally speaking, if oil prices remain somewhere around 90 plus for 90 days, right? Let's give it a 90-90 rule. This is typically something that can send us into a recession globally. Now, I know that's a scary word. The R word is what they refer to it in economics land. The R word is a scary word, right? Because it is no fun for anyone. And people who have been wanting prices to go down, look, you might get your house, you might get your prices go down, but the value of your home would go down. You'd probably lose your job. You'd not. I take that back. A lot of people would lose their job. Sometimes people will be like, "I want prices to go down." Well, do you really? Really, what you want is you want wages to increase faster than prices are going up. But that does not happen in a recession. In fact, what happens is prices go down, but your wage goes to zero. So that's worse. So you don't want recession. Recession is awful for everyone. It is a terrible, terrible circumstance. Because again, sure, prices might go down in the stores, but if you lose your job, then you have $0 coming in. So what really people, that drives me crazy, by the way, it's a pet peeve of mine, is when people will be like, hey, well, store prices aren't coming down. They're never going to unless you have a recession. Historically speaking, that's the only thing. There are certain items that have a depreciation effect due to like for example, in capitalism, TV prices have come down because people have found better and better ways to make them at more affordable ways or places. And the competition is steep for building televisions. So the price of a television for the average family has drastically come down over time. But for items, for everyday goods, like, a carton of eggs or milk or whatever, things that everybody needs, those things continue to go up in price over time because they keep printing more money, but also because in a healthy economy, prices should rise steadily, but not dramatically. You really want inflation that looks, and this is what the Fed is always talking about with 2% inflation, right? Think about this. 2% inflation is perfectly fine if people are getting 4% wage increases. But if you have a really painful inflationary period, let's say like in 2022, where you still had 4% wage increases, but inflation was 9%, that feels very painful because prices are going faster up than people are getting wage increases. Here's why you absolutely don't want a recession. A recession can lead to, let's say, 0% inflation, but this number goes down significantly. Let's say minus 3% or something like that. That's terrible because and that's just the aggregated number. What that means on a local level to an individual could be you and your spouse lose your jobs. That would suck, right? So that's why recession's no fun. Anyways, my point here with oil prices is this: if you have oil remain somewhere above or around $90 per barrel. Let's just say it's an average of $90. Let's say it goes back underneath. But if it stays up in this range for 90 days plus, it starts to really wear on the consumer. Gas prices remain elevated. People pull back their spending. That hurts corporate earnings. Corporate earnings coming down means they're going to let people go to sort of bolster their profit margins for their investors, because their investors are going to be angry that their stock prices are dropping, et cetera. So what do? They do layoffs. Layoffs cause stock price to rebound higher on a more efficient, running space, et cetera. It's not fun, right? That's not a fun environment. So oil prices do have real world implications for the economy. And so when you look at this, you say, okay, well, we got to watch oil real close then, because if this Strait of Hormuz stuff continues, you are likely to see inflation lead to economic pain? So there is some real world implications there. Anyways, guys, my friend Ivan here is coming into the chat. While he does that, let me set this up really quick. So this week we are giving away a copy of the Edge Finder. It is completely free to join, and here's how you can join. It's very easy to do. Step one, join the Telegram channel. We'll drop a link here in the live stream chat. If you are interested in getting a copy of Edge Finder completely for free, we are going to be doing a giveaway this week. To join, QR code right above my head, and in the live stream chat, we just dropped a link. Boom. Join us in the Telegram there. If you join there, what you'll see is there is an entry form to fill out to join the free giveaway for a chance to win a free copy of Edge Finder. That will be given out on Friday. So all you have to do for a chance to win is throw your name in the hat and join our Telegram linked in the description, live stream chat, or the QR code above my head. Hey, Ivan, how's it going, man?
Pretty good.
Ivan, what's the latest? So we had some oil price come down here 4% this morning. Stocks are up a little bit. Dollar is down a little bit. Are you thinking dollar is getting tired up here, or do you think it has more room?
I think it's over. I don't. I'm very optimistic. I'm always happy. Everything is great. Dollar should fall down to 0. I don't. I see your negativity. I see your depression. I see your recession in your trading. But I believe what's currently happening is we have a bit of a pullback on the hopes and beliefs about that air is actually good for us, that we are going to have some kind of relief in the Strait of Hormuz. So nothing has really changed from Friday other than we are more optimistic today.
Yeah, I was wondering if you had any sort of headline or seen anything. Again, I think possibly what it was is just positioning ahead of the weekend, right? You had so much fear baked into the price on Friday. People didn't want to go into the weekend being short the dollar or short oil, because we've seen, last couple of weeks when you have the gap opens, they can be violent. So we didn't quite get that, and now we are fading into the New York session with stocks opening in 6 or 7 minutes or so. We will see how that is received by markets. But VIX is lower, dollar index is a little bit softer here. But it's challenging for me, Ivan, because again, the reason I am still positive on the dollar and oil is because I'm just going to follow this until it changes, right? Because I'm not going to, personally, I have a hard time trying to call when this timeline comes to a close, because in my mind, I'm thinking, okay, Strait of Hormuz stuff, that is very much a hill that both sides are willing to die on, right? Iran does not want to give that up because that's their negotiating tactic, and the U.S. wants and needs to get oil flowing out of that region again to keep inflation from spiking and causing bigger problems. So I just think that it's not necessarily that I think it's all doom and gloom and it's all going to end terribly. I just don't know that there's some sort of quick draw resolution that the market is looking for. And maybe there is. And if there is, I will completely walk back what I'm saying and say, that's great news. And hey, a ceasefire, et cetera, that sort of thing would be excellent for markets.
Yeah, so there was some small positive news over the weekend. I'm trying to find it, but it doesn't matter. Because I'm running through here. But I think there was some talks that Iran wanted a deal, but then the deal is that one, you need to send home your for the other countries, you need to send home your US and the Israeli ambassadors and need to trade in Chinese yuan. Then your ships can go through.
Which I'm sure the U.S. loves that, right? They love the idea of trading, everyone trading in Chinese currency instead of U.S. currency, right?
Yeah. 2, I saw this morning a bit on the side, but I saw that India or Iran was requesting India. I thought it was friends, but they apparently have arrested 3 ships earlier or previously in the war. So they want their ships back to be able to sell oil to them. So Then there was the Trump went over and said, "Hey, whatever ships that's out there that is Russian, you guys can go to port without being sanctioned."
Mm,
Okay, so there was some loosening up of some sanctions here and there, but basically, bottom line is Iran, as far as I've seen, has continued um, to strike the Gulf states, and I'm trying to find the word. Is it Forija, the oil pipeline that takes 1 billion barrels of oil per day
mhm.
from west to east, so they can avoid the strait, has been attacked or was attacked yesterday. So, are we really in a better place? I don't know.
Just tricky, Ivan. And again,
Yes.
it's one of those things you don't really have a way, or at least I don't have a way to know where that storyline ends. And someone in the chat put out this as well. Tehran hasn't asked for a ceasefire. Quote, war needs to end in a way that ensures it doesn't happen again. So, and again, also someone pointing out Yemen came out swinging. So there is participation in a lot of different fronts, as you pointed out, the India situation as well. So it's just a hard one to tie a bow on and say, oh, it should be done. And, I know that the Trump administration has come out and said, hey, it's going to end in the next, 2 weeks or whatever. They said that last week. And so maybe it does. And let's, from a hopeful perspective, let's hope that it does. I just don't know that it's going to be an easy one. The other one that's kind of, just a tricky one is that the current supreme leader has, from his perspective, lost his whole family to this conflict, and so he's probably not going to back down as easily, I think, as maybe people are thinking. That being said, there is also the case to be made that positioning is already very much kind of thinking all of what I'm saying, and that's where you could maybe say, okay, well, dollar index has already been bid up on this. Maybe oil has already been bid up quite substantially. Maybe it's not moving much higher. The biggest thing for me is the duration. As you were listening to me when you first joined in, the duration of oil staying at these
Mm.
levels is what starts to cause problems. I just don't know exactly how everything plays out. I just think there may be a longer conflict here than people are thinking.
So I won't say let me put things straight, but let put the floor down a bit. I believe what's currently happening at the moment is what I talked about yesterday. This is a pullback into a belief that we're not going to have a long term war and we're not going to have a long term effect. We
Mm,
already are seeing countries having to ration, and there's already, I think it was Bangladesh or India or one of the two, that has very low or non-existing reserves. So they are basically out of oil already at the pump in some parts of the country. So okay, there is that, but we don't have an opening. I believe there will be an opening. And by the way, there's no winners. I saw someone talk about the winners. There is no winners. And even if
mm,
Trump goes back and says, "Hey, I won," I don't believe that's true. And if Iran goes back and says we won, I probably believe that as well. But it's we all as a world will lose if this continues more.
mm,
So the market then says, okay, since everyone is going to lose, that is nobody's interest. Let's just price in positivity and that this is going to be a result because we see the consequence, and that is very grim. Now, could dollar turn higher? Could dollar yen turn higher? Could gold turn lower? Could your trade turn lower? Yes, absolutely, because it's minute by minute. And today, yeah, that was one. Today, there's going to be statement from the IEA, International Energy Agency, in 30 minutes
mm.
about the release of the reserves. So maybe that's the positivity news today.
Yes, that's a good one to watch as well. And just a quick note from my side on gold, and then I'm gonna leave you to run solo for a little bit, Ivan.
Mm,
Somebody in the chat requested gold, and they're very upset that I haven't talked about it yet. So,
bad boy.
got to make sure I keep the people happy here. I know this is kind of a boring answer, but gold for me is very neutral right now. Given that we have pressure on rates to the upside here recently due to this whole geopolitical conflict. That's where people are getting very confused on gold. They're like, oh my gosh, war and uncertainty, that should be spiking gold. But it's also in a not so great way spiking yields higher, which is negative to the rate cut story that gold has been very bullish on. Fundamentals here are leaning not so great for gold, at least on Edge Finder's comparison of actual versus expected data here. We did get a weak jobs report, which is good for gold, but we had jobless claims that were healthy. ADP numbers came in better than expected. JOLTS job openings came in better than expected. PMIs came in strong. Retail sales, consumer confidence, inflation has been a little sticky, and the 2-year yield is still trending higher on a 21-day moving average basis. So that's just where I'm going to be a little bit caught in the middle with gold. From a technical perspective, you have a choppy chart here. If you look at like the 4-hour chart, you can see we're just kind of range bound back and forth here and losing this level of what was support last week. So I'm cautious on it, right? So I'm still thinking that gold still could continue to pull back. Long term, I'm a gold bull always. I think it's a good thing to have a little bit in the portfolio personally. But we lost that 20-day moving average, now retesting the 50. And my friend Chris Pulver, who comes on the show pretty frequently, also still thinks that you could have a healthy pullback to the 200-day moving average before a long-term continuation of the upward trend. I don't think it's out of the question, given you have, again, seen a rocket ship of a upward trend. I would buy that dip personally, but I don't have a real strong reason to press the gas or hit the brakes in the short term here. I'm neither super bullish nor bearish on it. Ivan, thanks for coming on here. I'm going to leave you to take over the show here for a little bit, and you've got it from here, man.
Thank you very much.
All right. See ya.
See you. Welcome back, everyone. Dollar yen. Anyone bothered? Anyone looking? I don't know if anyone saw it a bit earlier. There was a little bit of sneak peek from the weekend, where the the Japan and South Korean finance minister comes out and says, "Hey, we don't like the Forex volatility. They are very concerned." Number one in the rule book of intervention. The next thing that is likely to happen is a rate check. If you see anywhere in your feed it says Bank of Japan rate check, or for that matter, last time it was New York Fed, the Federal Reserve Bank of New York, did that to some banks. When that pops in, well, you know that we are about to be intervened. And how that generally does happen is one of two things: is either you can sell your foreign currencies that you have at your disposal, or what it likely is going to happen is that they're going to sell their US treasuries, most likely 10-year, and convert that into yen, weakening the dollar slightly, but strengthening the yen. So it's going to be a bond, likely it's a bond currency situation where they're trying to offset so it doesn't cause any impact to interest rates or future interest rate, but it's just a balanced approach, and that generally tends to happen about 160 or so. Last time they did that rate check was when we were 23rd of January. That was about 158.60. And then before that, we were about, a couple of times, but we were at 162, 161 or so. And that was 11th of July, sorry. And then before that, 29th of February, 19th, isn't it? 29th, sorry, 29th of April. And that price was about 158.50, and then did it again 31st, but that was a much lower price. So around 158 to 162 or so is kind of the range, and they have already warned us, so they can warn us a bit more, I would argue. But there is a direct threat to the dollar yen trade. So I've seen someone saying, "Hey, should we sell dollar yen?" Well, the problem here is, ladies and gentlemen, is that the interest rate differentials, or higher interest rate in America, well, you're not gonna have, at least expected, not so much from yen. That would mean dollar yen rise. With this conflict, which has sent dollar yen in particularly higher, um, that is likely to continue. So even though if you say we're going to short and we're going to sell, or you want to be a partaking in this intervention, good luck, because we don't know how much they're going to spend and at what time and at what level. Is that we generally always come back to the same levels. It may take time. It might be the same day, maybe the next day, maybe the next month. But at the end of the day, that's a gamble. So we see dollar yen slightly lower today. Fantastic. Why? Because dollar is falling ever so slightly, and that's kind of seemed to a relief. And I think if that continues to happen, and the only way it could happen is that we find a solution out of this Strait of Hormuz, which also we're seeing countries and participants trying to figure out how can we get oil out of the strait through the war, or even with and I saw someone saying that even asking China for military boats to help getting ships through the strait, which apparently is 21 miles wide, and for container ships to go both ways out of, it's very small. So it's an easy target if you want to target boats in that area. And do we think that China or Taiwan or Japan or Australia or France or UK, which has been asked, some of them, are they going to enter themselves into the war? No. So at least we hope that's going to lead to a solution anytime soon. And that should make us believe that Bank of Japan will not intervene because we get a solution. But the moment, oh, it doesn't need to be. But to me, I would say if it goes any above current level high of 159.74742, we are in for a ride. If that is what they decide to do, of course, it can just scare us and then not do it. But the only way interventions are going to work is that the market believe that it's going to happen, and the moment the Bank of Japan or a central bank loses that credibility, this one is going straight through. So, and it's going to go way higher. It's going to cost them way more because I'm going to have to spend more money on intervening. So, the best way or the best functioning of intervention is the scare tactic that it's going to happen, and then market generally does tend to correct itself. And if it doesn't, the only way is actually to do it. So if they say they are going to, they say they are not happy with current levels, can't remember exactly the word I use, but something that they are concerned about current Forex volatility, FX volatility. Just know that's going to come. So don't be surprised if this one falls 3 to 500 pips or so. It's not straight down, so you can get out of it. You will not be slept out generally, but it would be like tick, 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 tick. So it would take like 30 minutes or something for that to do about 500 pips. So trade cautiously. I've been struggling this month. I'm not a fan of volatility. Hi, booby. Um, I understand, and I agree. I'm not being that profitable in this scenario. I was previous to this, but it's all about, I think it comes down to the difference between me and Nick is how do you interpret lack of escalation. Now we have had a lot of escalations, and there is still escalations to be done. I see that. I didn't really see that in the beginning. I see that now there is a lot of extra layers that could send the oil higher. But then when there is no escalation, market that does today. You're like, okay, let's fall then. Let's go back to where we were, because this is pricing in um, a market or an economy that we currently don't have. So the difference between expectations and current is apparent. And this is just if we have a prolonged higher oil price above 100 or so. And then Nick talked about a recession. Then somebody said, I've never traded through a recession. So I did some digging. I think we'll have traded through a recession, because the last recession we had was in 2020. It was about a 2 month period, March and April 2020. So if you traded through on March, April 2020, you have effectively traded through recession. Apparently, Iran's only allowing China to pass. Well, I would imagine that, because that's how Iran's going to make money, uh, because that's their biggest customer. So of course they would need to allow China to pass through. Anything else would be absolutely ridiculous. Because as far as I know, China hasn't done anything wrong, and they're effectively helping them. So they should be friends, and they should be partners, and they should help each other out. But if they don't, then don't blame me. You are short dollar bound, so you're selling dollar, buying pound. Okay. What do you think about the weakness in pound? So what I see is that the weakness in euro, not anymore. The weakness in euro, the weakness in pound, the weakness that was in New Zealand, and the weakness in Aussie was and is, I would call it, understandable. I just I was wrong short term wise as to what should happen in what category, sorry, in what sequence, because this is effectively going to increase interest rates down the line if this continues. But on the other side, and it's very important, other side is this is also going to lead to lack of growth. So we're going to end up in stagflation slash recession. So the weakness is understandable, but I kind of disagree as to what are we supposed to price in. Are we supposed to price in higher inflation? Are we supposed to price in lack of growth? And what generally market does is that it prioritizes inflation above growth. And uh, current they didn't, but I believe over time we're going to see a stronger pound. They are supposed to have their interest rate meeting this week, and they were before this was priced in to have a cut. I believe that they are currently priced in to have nothing, to have a hold, and they and Australia's tomorrow, they are likely to hike end of year or towards the end of year. As you can see here from rateprobability.com, and you see RBA here, and where we're current are we are about here, and we market has currently priced in quite a steep increase. That is see 10, 15. That is one rate hike there at least, and then Bank of England is red, so slightly higher. They are coming in, but again, leading to what countries will have most inflation leads down to leads down to comes down to China. If China now goes over, and because it's already in a recession, it's already in a crisis, and when them not having oil and petrol and fuel to run its operations, which is propped down by a lot of debt, I think we're gonna have a bigger problem in Australia, and we're gonna have a bigger problem in New Zealand that is currently not being priced in. But as long as China survives, as long as China gets oil, and that's why Australia is being favored so much, that would also mean New Zealand, is that they will be the only country to survive all of this because they keep getting oil. And I don't think that they're getting enough because Saudi Arabia was also giving them. a chunk. I don't think that Iran is able to survive that. Supply that as well. Thirdly, we have Russia, who can and is updating their and upgrading their supply to China. So maybe if China is the one that survives all of this, then that should also benefit Australia and New Zealand and not so much the pound. But my base case is that this is going to get over. We're going to be okay. And pound, euro, Aussie, New Zealand should all rise. And Swissy, dollar Swiss, dollar CAD, dollar yen should fall. And this was just a temporary high for the fun. It was just to take someone out. Pan will cut. I don't know where you can see that, sir. How the central bank did make decision based upon a war themselves are not sure about. Cycling Club 55. Thank you for your question. So what's currently happening, right? They have all their models. I don't have access to those models, but can somebody give me a reason for oil would rise now? Is there something out there? That would be a very much thankful if somebody can read through. Yeah, okay, cool. Sorry. So they have also oil is factored into inflation, right? So how much 10% increase or 90 to 100 and 100 to 120? We have been here before, so they will have a factoring of where oil price is currently or where the median will be at the end of the month. And then it'd be like, okay, this is going to lead to so and so inflation. So where we had when their last meeting was about $64 or so a barrel. Now that we rose up to 94, which is it was 30, it's not 30, yeah, 40% increase. That doesn't necessarily mean an increase of 40% of inflation, but it's a significant increase. Going back to 2022, we had a significant increase in inflation, helped by said oil price, which at that time went up to 128 or so. So there is a specific factoring in for it. So that's why they know that this is going to come. They're going to at least need to mitigate this higher inflation. Second of all, how likely are they to do that? Because we all know it's temporary. We all know it's just temporary. So the longer this lasts, then you're likely to have higher inflation, and higher interest to come. And what all this is about, what we're doing currently, is pricing in how likely is it inflation to rise, and when is those inflations going to hit the economies, and two, when are central banks then going to kick in? But they're right now, you were going to see a lot of statements this week that they are very concerned about the current fluctuations and that uncertainty that this war is bringing. Big word this week. I can probably go to bet money on that word, uncertainty. But yeah, it will be a lot of uncertainty. But in that uncertainty, what does it actually lead to? What is the actual implications of oil going up 40%? Is inflation, and that is the primary thing that they're trying to control. This month pound can cut. Okay. That's not what the market has priced in, and I don't see that to be likely. Oil is currently falling. Interestingly, I didn't see anything on the squawk very quickly, but yeah, it's just China and them talking. Cool, fair enough. If anyone knows anything more than that, that would be great. That'll be helpful. But anyways, gold. I said yesterday that gold should fall on the basis of the current environment that we're in, meaning as long as the strait is still closed. But I also said the moment, and I should have said this earlier, but the moment we have some kind of, not even some kind of, that we have a definite answer of we are going to go higher now, meaning the war is over or US pulls out and everything is great, everything's fantastic, gold is going to have, in my simple opinion, is going to have a benefit. The reason is that we all now shaken as to where do we put our money because Middle East is no longer safe. Dubai is no longer safe, at least short term, right? That's mentality. Is where do we put our money? Of course, for the Dubai authorities, that would be fantastic if people come back now and hey, we got a 20% deal. You go back and you do. I don't know who did that, but the best time to travel to a place is just after risk events because then everything will be cheaper. That would of course boost the economy back up again. But to me, I would see gold and silver be benefiting when this is all over. In the meantime, we're pricing in higher inflation in the United States that make dollar stronger, that makes gold and silver weaker. So to me, this is a holding game. So if it goes down to 4,000, if it goes down to 3,000, if it goes up to 5,500, doesn't really matter. Because to me, I'm by the fact of, do we have a situation? Is it resolved? Yes or no? Okay, I'll wait. So that kind of makes a lot of my judgment at the moment. We are seeing some rebound in the yen pairs. And I don't know, did it come down enough? Yeah, okay, maybe. Euro yen is having a bit of a having a bit of a better day, though this is pre-intervention. And we all depend on this one falling. So you would probably going to say this week, I would say look for dollar yen to fall. And as long as dollar yen is falling, you are kind of safe to be in the other yen pairs. That's kind of a balanced approach. To me, I'm like, I'm going to trade yen pairs anyways. Give me a bullish trend, I'll take it. Given that my trigger will then be if price tomorrow or another day goes back up to 159.60, that's kind of like, okay, I probably this is not a good idea. I don't know the future. I don't know if they're going to intervene or not. It would be great for them to intervene. How my approach is that I'm not going to buy the bottom, but I would believe that we should go back up again. So for Aussie yen, for CAD yen, for Swiss yen, for Euro yen, for pound yen, all of them all is, are we bullish or are we not? And this is a fundamental answer for me in terms of, are we in a situation or in a position where we are going to have hikes in Japan? And before all this, they had slower growth, and I don't think growth is going to go even better now. They have slower growth, they had slower wage growth, they had everything, even inflation was coming down ever so slightly. So I don't see them to hike. And since they're not hiking, I can't I can't be buying yens. And as you can see as well, with the reaction from the market in this scenario, yen has actually fallen ever so slightly. It's not as strong as dollar. That shocked me a bit. That dollar wasn't as strong as wasn't as strong as the other safe haven countries. So dollar was much stronger than Japan and Swiss, which is also supposed to be equal safe havens. So it seems like everything went into dollar and not really into yen and Switzerland. That has to be a note for next time. So if we see a situation like this, like, okay, we have a safety situation, but it probably you needing to go into a more of a dollar based situation. Either get reduce your risk to dollar or add depending on how you're positioned, but just have that as a learning point that when we are entering the situation, dollar is going to move the most, and everything else is going to fall, and then we can pick up the pieces. Like now, are we? Is it ending? Is it not? And I believe it should have ended a long time ago. And I don't think that this situation is going to be resolved and it went better. I think that Trump, if you can listen, it's over. You got what you want. Get out. That's the best situation. That's how he's going to save face. That's the only way. Um, and this war is already incredibly unpopular. And if you see service members coming home in a coffin, it's not going to happen. It's not going to be. It's not going to make anything better. So I hope that this can become. This can end. So I'm still in this. Hasn't been stopped out. It's not a great place to be. I set a 5% stop loss on it just to make sure that I'm not a part of this kind of situation that is currently happening. But I would even argue that we really haven't seen the fall yet, or the fallout on the stock market, or on the S&P, or on the Nasdaq, because we have barely dropped, and because if you remember the tariffs, that was 20%, 21%, sorry. And now we have fallen, yeah, 5% or so. So nowhere near a major fall. And if we enter a recession that Nick talked about earlier, I think, yeah, the fall is we're not going to be 6-1. Where are we now? 6-7-1-8. That's going to be a cascade because we are so propped on future earnings that hasn't happened yet, that if there was a slight deviation to lack of income going forward because people lose their job and people can't spend as much as they do as they currently do, then I think we're going to have a much deeper fall. But that's not a part of me right now. It's we still have jobs. We're still okay. U.S. economy was doing okay. Is okay. As long as this doesn't prolong for too long. It's the best to look for short on S100, even after we are in discount price. Let me put this differently then. I would never, almost never short Nasdaq or S&P 500. Why so, sir? Because every time we fall, except for those major crises, it always comes back up again. And for me, it's very difficult. And even if you saw Nick is already break even on it, it's very difficult to catch where the bottom is going to be. So, I mean, you can be lucky. Okay, to me, it's luck because I can't prove to you that I can do it successfully. Straightforward. So I'll just wait for it to turn bullish again. And I did that during COVID. I did that all these other crises. I'm like, I'm not going to short it. One, because I'm really late to the party, and three, I don't know where the bottom is going to be. So, or two, the bottom, and it's going to be a lot of volatility. And even though everyone says in the news that oh, it's falling, it's 5% down, 10% down, 20% down, the next day it's up, back up again. So there is no elasticity to where price is going, and the crisis we're in, it's all about emotions, and it's all about how far down can we go and still survive the buy trade. It seems like it. Poppy says my portfolio taking a hit. I'm just thankful. Are you in oil stocks are you in OBX, by the way? That could have offset some of the upset that's currently happening though. But the Oslo Stock Exchange. Norway is one of the few countries that is actually benefiting from this, which is a highly oil-based economy. So a higher oil price benefits. So without us doing anything, because we do both deliver oil and gas, So that's a one way of offsetting your risk. Let me see if I can find some trade plans here. Your dollar coming in beautifully. As well as always, of course, where I put my stop loss is where we're gonna have the bottom. Thank you, fantastic. Am I going to enter again down here? Uh, I would love to. I would love to. My itchy fingers would say so. Yes, that's a good idea. We're broken above. But we all know that this. I wouldn't say this is a. I'm not going to say that this is a high and this is going to be a resistance because it might not turn out to be. Um, but what it is to me, it is pullback, and until it is resolved, what's currently happening, I can't do much about it. BPR and Petrobras, okay, sounds about right. So to me, this is resistance, right? Cool, fantastic. Market having a fun day. We just can turn lower, absolutely. Um, so what do we do in the meantime then? Reduce your lot size, reduce your risk, trade, what do you call it? Emotionally, based upon like demo trades, artificial trades. Just okay, if if this was a normal market, what would I do? I would do that. Okay, cool. And then continue on, and then it goes, and then you don't lose money on it. Because the only way you are going to mitigate your need for trading is by having some kind of release, some kind of okay, I'll just do it, but actually not lose money on it. That's the only way. Not the only way, but that's a way. And then leave the market, leave the trade, go out for a run, something. Do something else so you don't lose money on it because this market, until we have a solution, is and will be a gambling site, unfortunately. So, in the meantime, you can head over to my YouTube channel. You can join in when I'm live there, and make sure that you're able to make sure that you are subscribing. Second of all, I am the mentor here in these groups. So if you are starting with your trades, with your trading, with your trading, I will be very, very glad to have a chat with you and see where we can help you out. Because at the end of the day, I'm here to make you a better trader. And until next time, boom, make myself proud.
If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free-to-join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, bonus clips from the live streams and videos, giveaways to our products, prop firms, and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream or being dropped in the live stream chat as we speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream.
Good morning, everyone. Hope everyone is having a fantastic day and they had a fantastic weekend. Markets are opening here and they're pretty much reversing Friday's move. So I did go ahead, Marco and I discussed this, but I had 3 trades opened last week, and it was basically going long the Aussie basket. Let me go ahead and remove this right here. This is old, but I went long the Aussie basket, Aussie dollar, Aussie CAD, Aussie Swiss. I did went ahead and say that I was going to exit those positions on Friday because you could have had the possibility of an escalation or de-escalation, either or. A meaningful one would have caused gaps up or down. So I didn't want to be involved in that risk, just because, as we know, as this thing has been going on, most of the big events here tend to happen on the weekend when markets are closed. So again, I re-entered the market as soon as market opened on Sunday night. So the profits or the trades are running in profit here at the moment here. But the sustainability pretty much is still decided on, is oil lower, are yields lower, is the VIX lower, things like that. So just looking at the currency strength chart here, I was looking it up. I've been pretty much, this has been a really good tool for me. It's a free tool as well. Just on a day-to-day, intraday basis, see what currencies are stronger, which ones are not here. So you do have the risk currencies, so Aussie and New Zealand are up on the day, but you are seeing the dollar noticeably very, very weak here. So that's giving a boost on to my trades. You can see here with the dollar index. So usually when you get to that 100.5 level here, if you just look left, this is these 2 times that we've reached here, you do get a sustained move lower in the dollar index. Now, this time is a little bit different, I would say, because you still have the prospect of the escalation continues to go on higher, prolonged. If oil stays higher, then that's global inflation and yada, yada, yada. So as of now, we are getting that pullback here on the dollar index. I'm looking to go ahead and make a decision once we get to that 99.5, 99.6 level here. That was that breakout level, because this could very well be a break and retest type situation. What would make me go ahead and flip my positioning? Well, if you get a flare up in the VIX, if you get yields higher, which as of now here today, they are down on the day. So you do have that US 2-year yield trading back here lower. You do have the 30-year lower. That doesn't really matter though. The 10-year yield lower. So we are seeing that, and you are seeing oil down on the day as well. So if you still continue to see that, then maybe this will be another one of those historic or as we know, once dollar gets up here, it kind of trades back lower. We'll see though. So this will be a level where I'm going to monitor my positions to potentially take my profits and then repivot or just be cash and be reactive, right? That's the best thing, is when you are in no positions and you can actually start looking at markets with a clean slate and not have like a bias attached to it. So that's pretty much what I'm looking for the dollar index. Now, what that would look like for Aussie dollar would probably be, we get back to these levels here, like for example, like this level of resistance that we reacted to. So maybe Aussie dollar gets here and dollar index gets to this lower level here, and that'll be a time where I can, take profits and then wait and see, right? What that look like for Aussie CAD, similar situation. You get up into these highs here, and then you see what happens. Aussie Swiss, same thing. Maybe if we get to these highs here that we got to before, that would be how I would react. But thankfully here, I am looking at the Edge Finder for guidance. And as of now, the Aussie basket is still getting a very bullish reading. Some getting a bullish reading. So, until something changes there on that front, and as long as we see those lower oil prices, lower VIX, all this good stuff, lower yields, then the trade to me still makes a lot of sense. You are seeing a lot of risk on sentiment too with the equities in itself here. You did have the S&P 500 react to that 6,600 level of support, and then also this 200-day moving average as well. So I love to see that you have the Nasdaq doing the similar thing here, that 24,000 handle there. Dow Jones here is picking up on that 200-day moving average, so we'll see how that plays out here. So for the most part, you are seeing some risk on trading nonetheless. Let's go ahead and look at the comments here. Alan, you're long yen here. I'll talk about the yen pairs for sure. I'm really sad you guys stopped out of the S&P 500 long now, although to be fair, it stopped me out when oil climbed back over 100, where I probably would have sold. Look, man, if you had a predefined parameters as far as levels, don't beat yourself up. You can't control what happens in the market. If oil spikes to 120 again, that's out of my control. I will get stopped out of my trades. You can't beat yourself up for that, man. So, as long as you're trading with a plan, you understand, the risk before you get into the trade, all that good stuff, you're fine. So like you said, tomorrow's RBA cash rate decision, I don't think they have any reason to be dovish since they central banks. So that's an interesting stance, Sluggy, that I have, is that no matter the outcome, they will most likely hike rates, right? Despite this whole war that we're seeing here with US, Iran, Israel, they were going to hike rates anyway. They have elevated inflation. CPI is super elevated, 3.8% for 4 consecutive prints here. I'll show you guys. And for those that don't know, this terminal here is something that I use for my trading. This is where I get my macro biases. So I trade fundamentals and I trade technicals. For the fundamental part, this is what I use to do that job. So let's go to economic data here. We'll go to inflation data, CPI, and you can see here the Australian dollar, elevated inflation. So Sluggy, to your point, RBA is in a really interesting situation. It seems like they will have to hike no matter the outcome. So no matter there's a war, they're going to have to hike. Now that there is this prospect of global inflation, they will definitely have to hike. In my opinion, if global inflation is really high, really sticky, and it's showing up pretty fast, then they will have to hike very aggressive. So that's why you think you're getting that relative strength in the Australian dollar. So I like the trade. There's a lot of things going for it. I've went over it before, but you have interest rate projections for the Aussie. Most central banks are trying to stay neutral. They're already at that target rate like the Eurozone, or they're trying to ease the rates like the Fed, whereas the Australian dollar is trying to go ahead and hike those rates. So you do have that divergence in monetary policy with the central banks, which is helping out the Aussie stay firm up there. And now you add this thing, so that's definitely going to amplify that dynamic. Aussie CAD is good long. Yep, I'm in Aussie CAD too. So I got in on the open. So Friday, I did, take my profits here on all of the positions. It was pretty much a net slightly profitable trade, very, very small, like $250. But so now I'm back into the trade as well. And yeah, so as of now, we're pretty much retracing the entire move on Friday. That ugly red candle that we saw on Friday with all the Aussie pairs. I was not a fan of that. But yeah, we pretty much retraced that whole move. So yeah, I like to trade Aussie CAD long. RBA and RBNZ are both hawkish. Yep. That's good fundamental divergence. And this whole dynamic, this whole war thing is only adding to that as well. CAD-yen really good. So CAD Canadian, I think their CPI came in cooler than expected this morning, if I'm not correct, by 0.1%. Yes, they did, but the Canadian dollar actually firmed up a little bit. So something to monitor. You also do have like oil was elevated. Now as of now, it's down on the day. But for the most part, like look at dollar CAD here. Dollar CAD is falling off a little bit, but I think that's mostly due to broader U.S. dollar weakness rather than very strong Canadian dollar, because you do have the Aussie CAD still up here today. So I think that's what's pretty much driving the market. I mean, you can see that very clearly here with the currency strength index. So this yellow bar here is the dollar all the way down to that floor there. So yeah, we'll talk about the yen pairs here. I want to wait for Marco to go ahead and join the segment because Marco and I we like to talk about the yen. There's a possibility, there's a trade idea that we have with the yen, and I want him to be a part of the conversation. That way, you guys can see, basically us target every single angle possible, and you guys can leave the chat with some clarity there. But good to see here that yields are lower here today. Now, I didn't see, and you guys can correct me if I'm wrong here, I didn't see any major headlines over the weekend, major headlines that really would have moved the market. I know we targeted an island of Iran where most of like 80 to 90% of the production passes through. But I believe the island was unaffected. Besides that, I don't think there were any like humongous headlines there that would have really moved the markets either way in either direction. So correct me if I'm wrong there. But that's why I think markets are a little bit stable today. You're seeing a little bit of a risk on trading. The VIX here is down lower than it was before this whole thing even happened. So where is March 2nd on this chart here? March 2nd. Actually, no, I'm wrong. March 2nd, when this whole thing happened, like this area right here, is when the conflict started. So we're still a little bit elevated, but if you find our way down into the 21s, 20s, then the VIX has pretty much retraced its entire move on this whole escalation here. What is the 9F, the website that you're using? 9F website. I don't know if it's 9F. I'm using this right here. So this is the currency strength index. Then you have the edge finder, of course. And then you have financial juices where I get my real-time news, like headlines and stuff like that. So yeah, Sluggy, I'm pretty much right on you with that. You're seeing the price action seems to be de-escalation pricing from what I'm seeing here. Bitcoin, I haven't paid too much attention to, but look at that. It's been kind of creeping up here, guys. It might be a sleeper. Bitcoin, it's trying its best here to revive itself from the dead. It was pretty relatively stable despite all of this that was going on. So this price action here choppy, while everything else was going down, Bitcoin was actually holding kind of steady. Hey, Marco.
Hello. Let me just get set up here.
Sure.
Okay.
While you do that, someone's asking for my financial juice settings, so I'll go ahead
Yeah,
and do that
sure.
real quick.
Mhm.
I'll
Sure.
speed run it. So, my
Yeah,
friend
no worries.
Elvis,
No worries.
Elvis, if you want to go ahead and take a screenshot or something. Sorry, my ringer on my phone's going off. There you go. Yeah, take a screenshot of that. I'll go through it very quickly here. I only have a select few things on there, and then yeah, feel free to copy it. All right, and that's about it.
Yeah, so let me just, before we start our joint segment, let me just mention that I'll be doing a DNA funded giveaway. So if you guys want to participate, just fill out the form that is in the comment section. So in the comment section, you have the jot form, fill it out, and then when we have my segment, I'm gonna announce the winner. So yeah, that's about it. So how are you doing, Alan? New week, a bit of development in the markets. We have flipped to a bit of a sort of risk on a Monday. Personally, I'm a bit surprised. I would have anticipated oil to be higher and for us to be in a risk off sort of environment. But as far as I can tell, the markets, I mean, what do we have? Euro dollar bullish, Aussie dollar up on the day, Aussie Swiss as well, pushing higher. Bitcoin doing very nicely today, and oil prices down 5%. So, what's your take on that?
It seems like dollar index is driving that move.
Mhm.
Just looking at relative strength here, I can add that to my. There you go. Relative strength here. You see that the dollar is the weakest link by a wide margin there. So down big on the day, while other ones are steady. Now you do have the risk on commodity currencies like the Kiwi and Aussie here up on the day. But yeah, it seems like markets are trading or repricing some of that de-escalation premium. You can see that with dollar index down, obviously. Yields are lower, and oil is lower. So those are like the three biggest assets that I look for as far as to get an understanding if markets are pricing in global inflation or pricing out global inflation. And also, too,
Yeah.
something to mention, you do have the VIX here down on the day 12%.
But did I miss something? Because over the weekend, looking at financial juice, I saw mostly escalation. So I saw Trump bombing the Karg Island. I saw Iran kind of ramping things up. So bit of a surprise that we opened up with a risk on sort of environment.
From what I saw, we did bomb the island or attempt to at least, but I
Yeah.
think that there was no damage done, like no significant damage done. And I did see also talks with U.S. and or Trump and Xi attempting to have conversations. I saw that, and that's pretty much it. So, from my understanding, it was an attempt to go ahead and disrupt that island, but I think it was a failure or something because Iran immediately said, nothing happened to it. So we'll see. We'll see what
Yep.
happens.
Yep. And kind of the big news, if you scroll a bit higher, this one, I think you
Yeah.
mentioned it before. What's your take on that? Are you looking to sell UJ? This is exactly what I was personally waiting for. So some sort of a statement from the BOJ. And if we go to 160, I'll be pretty happy to sell UJ.
That's definitely something we talked about was you kind of need to have multiple stars aligned. Dollar yen did creep up here rather fast, especially those last couple days, those last 3 days. Now it's trading lower today. But yes, if you do get that elevated dollar yen there pretty quickly, and you do have now comments of them looking at or at least acknowledging that they're paying attention to the exchange rate, then maybe
Yep.
you do get an intervention at these levels, right? Maybe that can coincide with a weaker dollar. That way it can make it worthwhile. That's the only thing that I have trouble navigating at the moment is this is still too early. You don't know if this dollar index move here lower is going to be a sustained one or if this is going to be just another retest and then you continue the momentum higher like we have seen in the past. The way I would read that would be via yields and oil prices, really. If you start to see those yields get muted pretty quickly there and oil as well, then this is a sustained dollar move lower. and then it will make sense for the Bank of Japan to go ahead and intervene because it'll make it worthwhile. They don't want to intervene with a strong dollar because most likely than not, that strong dollar train is going to override that intervention, or the intervention will be very short-lived. You know what I mean? So that's kind of what I'm navigating now. But I do agree with you, Marco, in the sense that that 160 handle, if you get there, I will take an attempt to do so.
Yeah, I was thinking of maybe just doing small risk at 160. So if I bring up my charts, so not go in with full risk, but maybe 0.5% at 160. But I'm pretty sure that we're not gonna go above 163. I mean, the higher we go, the higher the chance that price will stop, if you know what I mean. So the risk reward and the probabilities, the win rate gets better as the price creeps up higher, because I just don't believe that the BOJ will let UJ go above 163. So initial stab at it, probably at 160, and then maybe add onto the position at 161.5, something like that. I'm still thinking about it, but pretty much we had the confirmation now that the BOJ is monitoring the situation, and I think that's sort of the main thing that I needed. Let me just check what the Edge Finder is saying. Bullish reading on the Edge Finder, okay, but this is not really an Edge Finder play. This is only a play regarding the intervention. And what I researched a bit was, in the past, the BOJ actually did interventions when there was a war, when there was a conflict, when there was a flight sort of into the US dollar or into the yen, to balance things out. So this is kind of the perfect time for them to do an intervention. Same with the SMB, with the Euro Swiss. So if I bring up Euro Swiss, this is the one that I'm actually in with small risk, and I'm betting on the defense of the 0.9 level. So the SMB has been quite vocal lately about not wanting to see Euro Swiss below 0.9. And if we get a de-escalation, this thing should continue higher, even if we don't get an intervention. And it's positive swaps, so I don't mind holding it. While selling USD JPY could be a pretty expensive proposition. So one thing that I would not like to do is sell at 160 and then get stuck in the position for 4 to 5 weeks. That would not be ideal. But I think I think if we do sell at 160, I don't think we're going to get stuck for 4 to 5 weeks, because there will be some sort of a development in the US and Iran war, which will push the price either to the stop loss or maybe to the take profit.
Yeah, and my mind takes me, Marco. Remember when we got to this level here on my chart? I'm going to zoom into this right here. 157, 158, that right there was just chit chatter about the idea or the possibility. And that right there in itself, with the addition of the Fed checking the exchange rate there, the cost, that sent dollar yen 519 pips lower. So even just the idea, markets did get scared. You saw probably some profit taking up here, some hesitation of buying at these levels. And then that right there, that speculation or those comments did go ahead and send it lower here. And so that's pretty much what I'm thinking of. If you start to see dollar yen stall out here as markets are hesitating, or new buyers just don't want to step in, because I wouldn't, right? Then definitely that would be a wise time or level to go ahead and take an experimental or just super low risk size and trade this thing to the downside. And hopefully you get to see those confluences of a weaker dollar, more comments, things like that will send this thing lower. And then obviously as it starts moving in your favor, then if you want to, you can add trade size. But for me, like this thing, when it intervenes, or when the Bank of Japan intervenes and it starts to really move lower and you see a confirmation, you're talking 2,000 pips to the downside, right? Even with a slow loss position or whatever, that would be meaningful, right? Am I trying to time this thing perfectly to where I'm going to get a home run trade and I can start buy my Lamborghini purchase next week? No, I'm not trying to do that. I'm just trying to understand that there's a possibility of intervention, and I'm not trying to bet the farm on it. I'm just trying to make a regular size profit relative to the move that we might be seeing.
So instead of a full payment on the Lambo, just maybe the initial sort of finance deal, a monthly payment.
Maybe I can just have lunch with the salesman or something, right? Get my foot in the door. But definitely not choosing my paint color and stuff like that. No way.
What I wanted to say, the sort of the meltdown that we had on UJ recently is just the evidence that there's very little buyers with strong conviction. I mean, it wasn't even an intervention, and the price dropped. What was it? Let's check it out. So 600 pips. So a crazy drop in price based on just rumors, which means to me or says to me that there's quite a lot of weak hands as far as the buyers go. So if we do get an actual intervention, we can melt down with a lot of force, and the move can be really profitable. So the reward to risk is there, absolutely. If you lose the trade, you lose -1%, but if you win, you can do 2%, 3%, 4%, 5%. And that's at the end of the day exactly what you need. I mean, most of us have a 45 to 50% win rate, but when we lose small. When we win big. So sort of disproportionate the winnings and losses. Did you re-enter your Aussie positions?
Yes, all three of them
Awesome.
on the open.
Awesome.
Yeah, so they're all doing pretty okay
Yep.
right now. So Aussie CAD, Aussie Swiss, Aussie dollar. Some of the readings on Edge Finder did trickle down here because I know the COT report was not in favor. So let's go to COT data history, and we'll go to the Australian dollar here. So last week we saw a 2.7% net change to the upside. And then, the week before last week, 2.7% net change to the upside. And this previous most recent COT report came at a -2.14% net change there. But nonetheless, if you look at the overall holistic view of the accumulation of the Australian dollar via institutions, via these hedge funds and all this stuff, you can see that in the yellow line here, it has been trending here to the upside. So last week's reading was a little bit weak for as far as COT data goes, but if you just look at the overall picture, you are seeing that accumulation there. And if you look at the top setups page, you're still seeing the Aussie basket there at the very top. So you see Aussie Swiss, Aussie Kiwi, the Aussie dollar isolated as a whole for example, like the Aussie futures contract there, very bullish reading +9. You are seeing dollar yen at a bullish reading, but you're seeing Aussie yen, Aussie CAD, and Aussie US dollar at a bullish reading of 5. So the basket is holding up quite nicely there. So that also keeps me convicted in the trade. And I do like to see, as we are seeing that risk on trading here, sorry, we are seeing a complete wipeout of, Friday's very big red candle across the Aussie basket.
Yep, absolutely. So you managed to get in pretty much at the same price, I suppose?
Well, the market opened a little bit higher, like 0.30%. So I pretty much got in right there. So I did miss a little bit of I didn't get a perfect exit and re-entry and didn't sacrifice. I sacrificed a couple pips. But that's okay. That's just part of the game, right? You can't squeeze the entire move out, but I am happy to be participating at the moment, right? My thought can change. If you get a quick dollar bid there, I'll be very unhappy with myself, but the fundamentals are in line. I like the technical level here. Like for Aussie dollar, you're pretty much like this level here. It's not perfect or anything, but when you get to somewhere like right here, for example, you tend to buy or see buyers, right? So this is like a level of support. And then on a Fibonacci retracement perspective, you can see like this low to high here. It pretty much tagged the 61.8 and traded higher on the Aussie CAD. And then for the Aussie Swiss here, it pretty much tagged into the 38.2/50% retracement level and traded higher. So for the most part, I like the technicals as well. And the fundamental picture, obviously by the Edge Finder, is confirming the story correct.
Yep. And I think it was a pretty good decision to close before the weekend. Personally, I did not re-enter the AU long. I decided to be more patient on that front, especially because my interpretation of the news that happened over the weekend was risk off. Just I thought we were going to gap lower on most of the risk on stuff. Didn't happen, so I was wrong. But essentially, in trading, it's all about like strong opinions held weakly and not weak opinions held strongly. I know as traders that are kind of doing live streams and we are very out there on the internet, we tend to flip-flop from opinion to opinion, and then people hate that, but that's how trading works. One day you're long, next day you're short, especially during times of a war or a crisis. You keep flip-flopping from opinions. But that's just how the game works. Like last week, I think I flip-flopped maybe 2 or 3 times between risk on and risk off, which net did result in a bit of profit. But okay, so now at the sort of this week, I missed the chance to re-enter AU, but there's gonna be something else on the horizon.
Yeah. Oh, that's the reality of trading, and having the skill set to flip flop around and accept that, and like not be ashamed of it or whatever. Because like you said, we're on the internet, right? So like usually you have a bias, you say it, and then people are looking to mimic or to take that advice, one way or another. But if, for example, like for the chat, right? If I'm Aussie long, if I'm thinking there's gonna be risk on trading, and for somehow overnight over the weekend they build a dam from Strait of Hormuz, right? And they literally cement the whole thing. Like I can't say anything, but I'm flipping my angle to risk off, right? But yeah, that's just the reality of it, and that's just how it is. That's just how it is.
Yeah, like the guys I follow, guys like traders and investors who have 10, 20, maybe even 30 years of experience. I read their newsletters. They flip-flop all the time. Like on a Tuesday, they may be risk on. On a Thursday, they may flip risk off. And then on Monday next week, they may be risk on again. But that's just how the game works. Trump says something, markets change, perceptions change. So yeah, that's trading, and it's tough to put it out on the internet because you get called out all the time. But that's kind of how it is. We signed up for it anyway.
Yeah.
A bit of a sort of more interesting topic. Gold, not liking this move this week, so selling off. What do you think about it? Looks like it's selling off on risk on, and it's selling off on risk off. So what's your take on gold? Is it just a very, very bearish asset at the moment, no matter what happens?
I would say it's just not in play. It's like that that slot machine at the casino that is not moving at all. It's just like you keep feeding money into it, and the bonus doesn't change or whatever, or depending on the machine, the pig doesn't get bigger or nothing. It's just like it's not moving at all. It is just one of those trades that it's not in play. And I know that there's a lot of gold traders out there that for the life of them, they just want to trade gold, but you just have to leave it alone. It's just not the in play asset, and that's okay. And that's the beauty about trading global macro, is that all markets are intertwined. So if the market conditions are not in favor of gold, it is most likely in favor of something else. In this case, anything dollar related is moving. Equities are moving. You have commodities. Yeah, Bitcoin is starting to revive itself now. You have oil moving. So that's just the reality of it. And if you go to Edgefinder, I'm pretty confident that gold is doing nothing. Let's see, gold getting a neutral reading of -2. That's just the reality of it. Like gold is fantastic, but it's not always in play. And this is one of those times where if you try to touch it right now, you're going to disappoint yourself. And then you're going to look back later and say, oh my God, oil did this, and look at this clean move that we had on the dollar or something like that. And you're going to beat yourself up because you're trying to force an asset. So that's the beauty about macro, is that you can trade anything as long as you understand what's moving, the moving parts about it. You can trade pretty much everything.
Absolutely. Yeah, and that's a great way how you put it, that gold is not currently in play. That's exactly what's happening. Currently in play, dollar, oil, stocks, maybe. Yeah, I would say stocks, but to the downside. Or last week they were to the downside. This week that may change. Gold, we need something new for gold. We need a new sort of catalyst that directly influences gold. Maybe it could be some Chinese buying. Maybe they come back online and start buying like crazy again. That would be pretty good to see. I would actually want to buy it, but I'm waiting for a bullish reading on the Edgefinder. So as you just showed, it's neutral at the moment. Once it flips to bullish, I like the current level. I like the daily chart. So for me, it's game on to hold as a longer term investment. or not longer term investment, but a longer term position, as the uptrend is still like pretty clear and untouched.
Yeah, I mean, like if you're not in gold already, which is the position to be in, just think about it this way: the more it goes lower, the better for you later, because eventually gold will be in play, as you know, Marco. Like there will be
Absolutely.
something to drive gold higher, and it'll be the talk of town again for another month or two, or maybe a couple quarters. But as of now, just it's in your best interest that it keeps going lower for a little bit. But Marco, I'll go ahead and leave you to your segment here. I know you have the DNA challenge, and then I think we have Tiger after us as well.
Yep.
But
Sure,
thank you so
no
much
worries.
for the conversation. We have plenty
Thank
of
you as
talk
well.
here this week, so I'm looking forward to that, and we'll see. Maybe tomorrow we will have a totally different outlook, right? That's
Yeah.
the beauty about markets.
Yeah, maybe Trump comes in and says something crazy again. But thank you,
Alrighty.
Alan. This was really fun, and let's talk tomorrow. Yep.
Alrighty, see you, man. Bye bye.
See you. I want to post the link to the giveaway form one more time. Okay. So in the comment section, you can find the link, fill it out, and you'll get entered into a DNA funded giveaway. It is going to be a 5K one-phase account. Quick plug of DNA. If you want to get funded, there's a 25% discount code, 25% off DNA funded with the code A1 Live. Okay, so the code A1 Live gets you 25% off any DNA funded challenge. This right here is my personal 25K two-phase account. Current equity is 25.091. Okay. And this is phase 2. So I passed the phase 1. Yeah, this was phase 1, passed it. Now time for the phase 2. Currently around break even. I need to hit a 5% profit target. So we will see how I get on. But anyways, if you want to get funded, this is a great company. There's a big broker behind them. And with the code A1 Live, you get a pretty hefty discount of 25% off. So let's see the comments. AV, hello, welcome, AV. Can you cover GBPUSD and NZDUSD? Yeah, sure. Let's do it. GBPUSD. Let me check the edge finder. BUSD. Bearish reading on the edge finder. I would agree. I'm also looking to sell, and we are pulling back to the 20 MA. So let's put on an alert right here, because this does look pretty good. I mean, the edge finder is bearish. UK is definitely in some financial trouble. US dollar gaining value. I think this war is going to be a prolonged one. As it stands at the moment, a lot of oil infrastructure has been destroyed. Sort of the US and Iran, they don't want to do any sort of a compromise. They're not negotiating. They're not talking. So essentially, the dollar should catch a bid, should gain value, and overall selling pound dollar is a good trade. I would look for a pullback. So I'm looking for a pullback to the 20 MA, and then it's going to be game on to get in. The second one that you mentioned is NZDUSD. So let me just put it on here. NZDUSD. Put it on my watch list. So NZDUSD. Let's see the reading. Bearish as well. I do prefer pound dollar. So I do prefer pound dollar. I think the pound is a bit weaker. Let me see GBPNZD. Yeah, I would prefer selling GU instead of NU. Okay, I'm looking at the whole overall situation in the UK. It's not a good situation. The numbers are pretty bad, and both are a sell. Yes, I would agree. So selling GU, selling NU, it's a pretty good. Both are good trades, but I prefer GU. Okay. XOM. I'm not sure what XOM is. Bitcoin. Bitcoin looks pretty interesting. One thing that I read on Twitter, of course, Twitter, why is Bitcoin going up? Apparently, a lot of people that are fleeing the Middle East cannot bring out their wealth in gold bars, that stuff, and in cash, it's a problem. But crypto, you can do it. I mean, you just need a USB, and they probably won't find that Bitcoin USB on you. And it's much easier to find cash on you. It's much easier to find, of course, gold bars. So if you want to move your money away from the Middle East, you can do it for crypto pretty easily. Bitcoin may be catching a bit because of that. Bitcoin has been pushing higher, acting sort of bullish after the conflict started. So that was one theory that I saw on Twitter. Is it true? No one knows. Do I care? No. If Bitcoin continues to catch a bid, for me personally, I think this just shows you that there's very little sellers left. So like the sellers are exhausted, in my opinion. Buyers, if they step in, I think it could be pretty easy to push the price higher. If we finally get a breakout out of the range, I would be pretty interested to look for buy setups. Let's see, Bitcoin. I don't think a bullish reading, actually. Okay, fine. We have seasonality COTS. Okay. Yeah, if we do breakout, it could be nice. If we get this, I think that could be pretty high probability. So that is something that I'm looking for. A breakout on BTC USD. And then, of course, a potential buy setup. By the way, if you want to get all of my trades, I will most likely take, if we hit 160, I'll take a sell setup on USD JPY. If you want to get all of my levels, make sure you join the A1 Discord. Link is in the description. And you can use the code Marco to get 25% off. And now, time for the giveaway, just so that I don't forget. Let me open up all of the submissions. So today is 16th of March. Let's see, 16th of March. Okay, we have quite a lot of submissions. Damn, I think this is the biggest number of submissions I have ever seen. Okay. Let's copy the names. Put it in my wheel. Spin. Let's see. So, Trisha, Prevail. So Prevail P, congrats on being the winner. After my segment ends, I will send you a code for a free 5K one-phase DNA challenge. Getting back to it. I'm Chinese. I do wish I could buy gold like crazy again. Okay, Joshua, hello, welcome. Why is the market dumping suddenly after opening? Which market are you referring to? Are you referring to oil? The oil price? Marco, when are you invading Serbia? I think they're gonna invade us before we invade them. I caught some BTC longs during the weekend and my TP got hit. Awesome. Awesome. Congrats. ExxonMobil. XOM. Let's see. XOM. I'm not a big stock guy, just a disclaimer. So I don't trade individual stocks most of the time. But this looks bullish. This looks pretty good. So just as far as technical analysis goes on the daily chart, this looks good. Again, not a stock guy, so you're going to have to talk to Nick. Sluggy is long BTC. Awesome. Awesome. I think it's a good trade, especially if we get that breakout I was talking about. If AUD is bullish, is AUD NZD a good pair? No, I would look for a weaker currency. Personally, I like the Aussie Swiss because we will most likely get an intervention soon on the Swiss, curbing the Swiss franc strength. That is going to push AUD CHF higher. I also like the pound Aussie, selling the pound Aussie because pound is one of the weakest currency pairs at the moment. AUD NZD is not my favorite thing. So it's still in a massive uptrend, true. Let's just see the edge finder. Very bullish score. Okay, it may be fine. Maybe fine. I just might be a bit ignorant. But if you want my personal opinion, I like buying Aussie Swiss and selling the pound Aussie more than I like buying AUD NZD. So that's about it from me. Remember, 25% discount code on A1 Live or is A1 Live for DNA funded. So A1 Live, 25% off DNA funded. I will see you guys tomorrow. I'm streaming every day of the week. I have one giveaway per week. Good luck in the market. Stay safe and don't go anywhere because you have Tiger coming on after me. See you.
This next segment of the live stream is proudly sponsored by the one and only Ola Prime. Ola Prime is easily one of the most impressive prop firms that I've come across with an incredibly professional team. They offer fast payouts within 1 hour, up to 95% profit splits. They have the largest number of trading platforms. I mean, just take a look at this list. They have MetaTrader 4, MetaTrader 5, TradeLocker, DXTrade, MatchTrader, and CTrader all available to their traders. And that's just for the Forex side. On the futures side, they have DX Futures currently with Tradeovate and NinjaTrader coming soon. Ola Prime has one of the widest selections for challenges and funded accounts that I've come across, with a wide range of account balances you can choose from, like 5 all the way to 200K. And just take a look at the variety of different challenges you can choose from to fit your trading style. They have a 1-step or 2-step pro accounts. They have the 1-step prime, 2-step prime, direct accounts, Ola Prime, 1 challenge. I mean, you have a wide selection here. And the reason this is so important is that you as a trader have a unique style. Everyone does. And finding the right challenge to meet your criteria is very important. If you go through their website, which I encourage you to do so using the link dropped in the live stream chat right now, you can explore in full transparency all of the different account types, all of the rules, etc. They also offer news trading and weekend holding, and they have direct and challenge accounts available. For a limited time, stream viewers get extra discounts using the promo code that you see on your screen right now, and also through the link and promo code being shared in the live stream chat. Take your trading to the next level with Ola Prime. Now back to the live stream.
What's going on, everybody? Tiger here. Happy Monday. Hope you're doing well. Caffeine's hitting me hard this morning, so I'm ready to turn some cartwheels. We got some bipolar Kansas weather, guys. Let me show you something real quick before we get to the charts. If you want to know what bipolar weather looks like, this is what it looks like. Okay, last week we have a couple days in the 80s. We dropped to 40s with some rain, back to 60, back to 70s. Shorts weather over the weekend. Cools down yesterday. Today we're at 31 with an inch of snow outside, only to turn around later this week and we're back into the 80s. That's what bipolar weather looks like. So, yeah, we experience all 4 seasons a lot of times in the same stinking day. It's crazy. Crazy. But anyway, as far as quick programming note, not sure if they mentioned it earlier or not, but we will be starting later on Wednesday. We do have the rate statement coming out. Okay, we've got our rate statement coming out 1 p.m. Central, so that's 2 p.m. New York time on Wednesday. Other than that, I think everything looks pretty well the same. As far as the weekend goes, guys, I did something that I almost never do. I got in a trade. I got in a Bitcoin long trade. Just to recap, it actually hopped onto our bullish list towards the latter part of the week last week, giving us a nice +7. And I noticed I was up pretty late Friday night. Let me just go over here off the screen. And I had seen that Vivek Ramaswamy posted about 2 a.m. in the morning, my time, or maybe it was 1 a.m. Breaking: United States just passed the bill to ban the Fed from creating a central bank digital currency. This is a massive win for Bitcoin and freedom. It's kind of how he finished it. But it was part of another bill that the Senate passed called the 21st Century Road to Housing Act, where the Senate passed it at an 89-10 clip as far as the votes. But it's more so focused on housing supply, affordability, that kind of stuff. but they threw in this as a rider. So as soon as I saw that, even though it was 1 a.m., guys, I remembered back to the Edge Finder having a +7 score. So I decided to hop in middle of the night. Okay, basically early Saturday morning. Basically got in on this candle right here. Okay, started off with a 4-hour demand zone. If I just kind of scroll out, let me turn on my sessions real quick so I can see where I'm at. Okay. So yeah, it started off. We had, let me see here. Yeah, down here. So this was a 4-hour demand zone, which is the green rectangle. And then within the 4, I had my 1 hour. There's my confluence, the white line you see there. And it was just perfect timing. I just so happened to be up late because I don't know how to get to bed at a decent time, especially on the weekends. But we bounced in and we kind of wicked through and closed about the midpoint of that candle. So, you know, when I saw that, when I saw the news, I thought, well, you know what? This is probably a pretty low risk opportunity. Obviously, have a stop loss up under here, take profit up here in the middle of this supply, but we did have a supply zone. Just kind of zooming in. Okay, I was kind of keeping an eye on the potential that this could give us some problems because we had a lot of volume that took place when this supply zone was created, the end of, well, I should say the latter part of the New York session on Friday. So that was quite the dramatic drop with a lot of volume. So definitely wanted to be careful there. But yeah, I ended up buying in here and got out of the trade in the evening yesterday for a nice weekend trade. So I don't know. Does that count as a last week trade or a this week trade? What do you guys think? That's why my lava lamp is on the green side. So, hey, it's already starting off to be a good week, right? So anyway, that was the weekend fun I had. And then let me just get my chat over here so I can see you guys real quick. Where did my chat go? Here, let me refresh my screen. If you guys have anything you'd like me to check out, let me know. As far as assets or anything, I'm not in a trade at the moment. But obviously I've got, you know, a handful of alerts I'm keeping my eyes on. So just going back to the top setups, not a whole lot has changed as far as the strong currencies. If we take a look, obviously we did have Canada's inflation numbers just come out earlier. That was definitely a miss for Canada, but it was also a miss the previous time. So when it comes to, and this is Canada's CPI, when it comes to the heat maps, or not the heat map, the surprise index, yeah, Canada basically is staying the same at 42%. So definitely on the weaker side, but it didn't, you know, again, it's just basically the same since the previous report was weak also. So as far as strong currencies, weak currencies, pretty much the same. Aussie's still at the top. You got euro, you got the dollar up there as well. And then at the bottom, you still got the weakness of the pound and the Swissies. So yeah, any opportunities we get to match those those currencies together, as long as the Edge Finder approves, we're on it. Aussie Swiss obviously leading the way at the moment, +11. Aussie Kiwi a +10. We do have dollar yen I'm keeping my eyes on. And then on the flip side, pound dollar, obviously the weakest, pound Aussie, those are obviously going to be my two favorites. Now, we got things on here like euro dollar shorts, potential shorts, euro Aussie shorts. I just personally, guys, am a little hesitant on trying to short a strong currency. Because if we look at the euro, it's the second strongest among the 8 majors. Okay. 2 out of 3 high impact reports have been exceeded. So fundamentally, this doesn't look like something I personally, that I personally want to short. And it's even, it's good that we have the same for the pound on here. So euro Aussie or pound Aussie, I'm taking pound Aussie every day. Euro dollar, pound dollar, I'm taking pound dollar every day. So yeah, that's what I'm definitely keeping my eyes on over here. Let's see, I do have a couple alerts. I'm actually a little thin on my alerts. What we got up here? Aussie yen bouncing from demand. Okay, let's take a look at it. Yeah, range bound ass weather. That's right. Market. Okay, so yeah, Aussie yen. Let's take a look, and obviously we're getting a nice +8 score. So let's see. Do I even have? Oh yeah, see, I don't even have that on my alerts, and I think I remember why. Aussie yen. All right. So let's take a look. Daily on the right, as always, I got my 8 above my 21 EMA. Got higher highs and lows. It matches Edge Finder. I have permission to trade. As far as the smaller time frames, let's pop down here. You guys see we bounced off of a 4-hour demand zone already. This was during the day on Friday. Now, I was more interested at the time in watching a couple things. Let's see, 12 o'clock. Let's see, was I still in my pound dollar at that point? I can't remember. But either way, yeah, look, here's the thing. We've bounced off of a 4-hour demand and we're pushing up. Now, part of the reason I'm hesitant about hopping in this trade is because we're kind of bouncing into this supply zone. Okay, if I turn off my indicator, you see we got a green candle right here. Green candle, big red expanded range candle leaving the base. It leaves a gap in its wake. Okay, if I draw that up for you real quick, just for a quick visual. So there's our gap showing downward strength. So showing supply exceeded demand, right? Now I bounced into the demand, the 4-hour demand, and obviously that's partly why we're getting that push up. So all I'm saying is, for me personally, I just would like to see price continue and close above the zone. If we can do that, then that for me makes it a little more appealing. But so far, we're still within that supply zone. So if I just kind of zoom in a little bit, yeah, I basically want to see it just go a little bit further. But see, we go a little further, and now what are we doing? We're bouncing into another supply zone right here. Okay, that candle there produced a gap as well, just like this one. So we're just in a little bit of sketchy areas for my taste. You know, ultimately, I'd like to see it break through both of those supplies. If it do that and then get a retracement somewhere, if we find a demand down here, that would be a little more appealing to me. Aussie CAD, yeah, we'll look at that as well. Kale Rapids, yeah, tough. That's a tough name to figure out. Kale Rapids, yeah, we'll look at that in a second as well. But yeah, that's just the reality. We got to chew through these zones because they very easily could catch price back to the opposite end. So if we drop down in this zone, we've got here's the cool thing. We have hindsight of knowing that we're already bouncing off of this demand right here, right? So that makes it, a good idea to start looking at this. Now, I don't think it's really I don't really think it's an impulse leg yet because, again, we got to break through these zones. But if we do, let's drop down and see if we have any supply zones. Let's just reset this. Okay. This is technically, you could technically call this supply, guys, but to me, that's just too many candles to the left because that does leave us a little bit of a gap. Now, that's not anything to write home about, but it's a gap nevertheless. So there is technically just a little bit of inefficiency there. And what do I like to find? I love finding inefficient markets because there's typically a zone with unfilled orders on the opposite end. But the challenge here is that there's a lot of wicks, a lot of candles. I don't know. That just doesn't look that appealing to me. Now, this gap looks a little better. It's kind of a zone on top of a zone. If we're looking at this candle here, okay, because that presents an awesome gap, does it not? See, there's our gap here. See, that's a lot stronger of an inefficient market. So, if we could continue to push price up, break some of these structures like I've drawn up here, and then retrace down here to these zones in the future, maybe not today, but, middle part of the week or something, then perhaps we would look at this as a zone on top of a zone and just look at it like one big zone and put a stop loss underneath. Or if you want to be ultra conservative, put it underneath the swing low. Because we already know that this demand zone's already been mitigated. So there have already been, unfilled orders sucked out of this area. So I wouldn't expect it to be strong enough to push price up. If it breaks this structure, though, yeah, I'd probably be cutting a loss down here if price were to go against. But for me, I just got to see some more strength before a retracement back. So hope that helps on that. As always, guys, this is our opinions, not financial advice, but if I put my money on it, I just personally would have to see it start breaking those structures first. So there's that. Aussie CAD was also asked about. Yeah, Aussie CAD, guys, +6. Yeah, a couple of these hit some decent areas, but I just didn't feel the greatest about them. Okay, we got our 8 above our 21 on the right. That matches Edge Finder. I'm good. Lower. Now, we did get a big pullback, but that pullback, what did it pull back into? Pulled back into a 4-hour demand zone, and then what happened? Okay, caught the unfilled orders. It pushed up, broke all these structures in the wake of it. And now we've retraced, and I've drawn up a supply zone. What did I draw that on? A 1 hour? Yeah, 1 hour, 2 hour, it looks like. So that's a potential point to be aware of in case we buy somewhere down here, because it left a gap, right? So when we're talking about putting targets, profit targets, we got to be aware of that. Conventional technical analysis says take your trade to the swing high or the swing low, but these zones, these little zones that are hiding, they just don't get talked about enough. So yeah, let's see here. And did you say, yeah, good for buys? Yeah, I mean, currently we're on a 4-hour, 2-hour chart. We're kind of making those lower lows and highs. So let me think. Yeah, daily, there's nothing there. Yeah, I would like to see some of these highs get taken out, break some structures to the top side. I mean, if we could do something like this, maybe break this supply zone, and then come back and find a demand zone on a newly created impulse leg like this would be, then I'd be okay with a buy. I just need more information. Okay, let's just say we get a demand created somewhere in this area. That would be a good buy. But currently, what have we got? We got lower lows and highs, right? So it would just be, in my opinion, a little risky to be trying to buy here. There is a demand over here, hiding over here, but it's a little weak, it's a little narrow. I'll draw it up anyway. Let's take a look at it. It's just a little on the skinny side. Oh, by the way, I did buy a brand new wireless mouse, so everything moves like a charm. I'm like stoked. I had one on a cable, and it just the little wheel kept like freezing up or hanging up. So yeah, everything's moving pretty well now. I like it. But anyway, yeah, we do have a zone down here. But again, if we were to buy down here, well, what are we going to be doing? Ultimately, we're going to be making another lower low and lower high, right? So I don't know. I'm just a little bit cautious about trying to buy with this 4-hour downtrend, right? But yeah, that is definitely a zone. Now, and the other thing is the volume at the bottom, the VSA, it's just average volume. There's nothing really outstanding here. It's not like we have any yellow bars or red bars. So that's another thing I'm cautious about for buying there. Just looking at this pair, it definitely looks to retracement. Yeah. So yeah, I just think there's other better things. But again, if we start breaking higher highs and lows, yeah, I really like Aussie CAD, especially if we can break this supply zone in the midst of it. So that is that. Wow, just realized I'm losing my voice. Hey, ladies and gents, guess what? I got an offer from a financial analyst position / content creation. Yesterday, I came back with a counter offer. We met in the middle. So finally got all that stuff settled. Super excited. So yeah, I just thought I'd get you guys aware of that because I know some of you were asking me on my other stream as well. So yeah, pretty exciting stuff. CAD yen. Let's look at CAD yen longs for you there, Tato. CAD yen. Let's see. I don't know if we're on the list at all. CAD Swiss is on the list. I guess I should probably refresh this in case anything's changed, but I don't think anything has. But yeah, we'll take a look from a technical setup. We do have an uptrend. We've got the 8 above the 21 over here on the right. We're a little extended though, because as you can see, this is the swing low, and then we're pretty much at the swing high. So to me, it looks like we're at the very top of the curve, right? Pretty much at the top of the curve. So, but let's drill into some smaller time frames. Okay, here's a 4-hour on the left. Not really a good looking demand here. What does a 1-hour give us? Anything? Yeah, you could look at that as a 1-hour demand. I mean, we did have a decent spike of volume coming out of it. It's just a little slow. That to me looks a little slow, and we haven't even broken structure. Because if we look over here, what did we bounce into? A 1 hour supply. Okay. So we got a supply there that looks like we bounced into, and it's fighting it as we speak. Yeah, it fought it so hard it pushed it down. So yeah, I don't know. I don't really know if I like this. There's a lot of wicks. There's a lot of candles here. That zone is a zone, but it's kind of next to a bunch of clusters. So I would look for more of an institutional type of zone, maybe something further down here. Let's see what a 2 hour looks like. Did that touch? This didn't touch. Hey, wow, I'm going to have to play with this mouse. It's a little squirrely on me, but at least it works. That's all that matters. Okay, that's quite a zone there. We got us a indecision candle, a doji, a really skinny doji candle, long-legged doji. Okay, that could potentially give us some type of boost. And the cool thing about that demand zone is we've got a swing low over here with stop losses underneath, right? For these traders that bought in this area and pushed price up, where'd they put their stop losses? Somewhere down in this area. So they put their liquidity, they put their stop losses right in the middle of a demand zone where there's potential unfilled orders. So that might work as a decent confluence for a buy long, something like that. Okay, again, this is technicals because fundamentally we don't have a signal. Fat CAD yen is probably pretty neutral. Yeah, it's straight up zero. So this would have to be a technical only trade. And I just, if you're looking to buy the CAD, which I wouldn't know if I'd want to right now, because again, we just had that report that came out negative, then yeah, I'd be definitely looking at the CAD. Here, let's get my top setups working here. Okay. CAD Swiss, it is giving us a +5, but let's take a look at the currency strength. So it's asking us to buy Canada, which is one of the weaker currencies. Now, the Swiss is the second weakest. But you see how close together those are? Right? They're both technically weak. I just don't like it. If I want to match something with the Swissy, I'd be wanting to match an Aussie or a Euro. Okay? Or a dollar. But to match two weak currencies, I just don't like to do that. But if you do, just be careful. Make sure you got a good stop loss in there. What else we got? Euro pound is still retracing to drop lower, is what it's looking like. Euro pound, one of the molasses currency pairs, guys. The 40 pipper, right? That's how fast. That's how much it moves on average a day. Euro pound, where you at? You're hiding. Okay, we got our. Okay. So we've got our 8 below our 21, which signals downtrend, but we're bouncing into demand zones. 4 hours, I think. Yeah. So we're currently bouncing into that demand. That's why we're getting that reaction. That's why we're getting that rejection. Okay. All my moving averages are pointing down. But my demand zone is saying, nah, we want to be taking you up top. So I don't know. I think that's just like a no-go. If you're just looking at a technical setup on a higher time frame, I don't know. Let's see what a weekly looks like over here on the right. Yeah, see, our 8 is actually below our 21 still, even on a weekly. So I'm a little cautious about that. We got a lower low, we got lower highs, even on a weekly. I don't know if I want to be trying to take a stab at a demand zone over here. No, even though it looks pretty good. I mean, it looks pretty strong, but I don't know. It's just a no-go as far as I'm concerned. Euro pound. Crude oil, 4 hour demand. Let's look at it. And I'll show you this picture in a second while I'm here. So yeah, crude oil, 4 hour, you said 4 hour demand. Let's look over here. Yeah, I still feel like it's overextended, number one, because it's way above even the 50. But not only that, we bounced into a 1 hour supply, which I drew up. See, if we isolate and look at this spot over here, which is what we're chewing into, and this is part of the reason we're getting this reaction. Okay, let's zoom in. Okay, so we're looking at this candle here. And we had a lot of VSA activity, a lot of institutional type volume trading activity happening right here. So that to me looks pretty decently strong. And we had a gap. Now, there's a lot of candles to the left, so that's part of what would make me feel a little bit uncomfortable or a little more comfortable going against the grain on this, meaning buy it anyway, even though it's touched the zone. But it's kind of hard to ignore all the volume that took place, all the activity. So that's part of the reason I personally am not interested in it now. Man, I tell you what, it almost, I mean, here's the thing. I'm like right there with you. Because if I look at a 2 hour, okay, we're looking at this on my stream this morning. This is a 2 hour demand zone with a gap. The zone had a pretty decent amount of trading activity. We did break these little tops, but I think they're kind of minor tops. Ultimately, what I would like to see, and I think I already drew it up. Yeah. If I were to buy oil, it's kind of similar to the couple of these others we just looked at. I really want it to follow the trajectory of this green line I drew up. Hey, let's bust through the supply zone that I just kind of looked at a minute ago and get a close up here. If we can do that, well, then this zone would have looked a lot better. But the problem is the 1 hour supply zone was strong enough to push price all the way back down to the demand zone that you pointed out. Let's see, is that the right one? You just put the, okay. Oh, you said 88.5. 88.5. Okay, so then you're looking down in this area. Close that gap. Close the gap from what? A few days. What day was that? Wednesday. A little bit of a gap, not too much. Yeah, it's a little skinny. If you're looking 88.5, that's basically at the upper end of this entire consolidation. Is that right? So I just know, yeah, because you're basically looking right here. That's a little bit of a chop zone. Think of how many retail traders just got chopped to pieces in this area. That's fair value. That's fair market value for that 2-day stretch. And then ultimately we busted up. We broke up, right? But that's just a little choppy. I don't know. It's the zone itself. I mean, if I kind of drill into here, I mean, I could look at it and make a zone out of this area here. Right? There would be a demand because we do have a few basing candles. That's after a leg in. So it's a strong leg in. You have a few basing candles and then a strong leg out. So that is a rally-based rally. So yeah, by definition, it is. I just would have liked these candles to kind of fill in a little better. But look, the volume at the end of it, pretty low. See our VSA candle for that 4 hour period. And that makes sense because that's what is it, 3 p.m. my time? Yeah, 3 p.m. Central, 4 p.m. Eastern for that candle there. I don't know. This is what scares me. If we didn't have all this congestion, this would look a lot better in my opinion. But obviously do what you want to do. But I just know that I probably wouldn't want to be putting any money on it. Unless it were just like a little limp in, position. I mean, at the end of the day, if we close above this and then retrace, yeah, I could see maybe just put a few bucks in. I wouldn't want to be putting a full position in, but that's just my taste. I'd maybe put in maybe a third of what I normally trade per as far as risk goes. So possible, I could see that. But anyway, what I wanted to show you guys was the Strait of Hormuz picture I found over the weekend. Let's do this. Wanted to show you guys this. Oh, I guess I got to go to this side over here. And then we'll get up out of here for the day because I think we're about done. This is the choke point. This is the choke point that everybody's so worried about. Everybody, just like it's been mentioned already. You got a 20-mile stretch at the nearest choke point. But if you notice, the traffic has got to stay within. It's got to stay within about a 6-mile stretch of land if I just kind of zoom in. See this? This is your outgoing traffic, and then right here is your ingoing traffic. So it's about a 6-mile stretch, a 6-mile width right there. A lot of people think, oh, we got 20-mile stretch from land to land. That's plenty of spots to weasel in there and get in and out. But that's that's the choke point right there. I just thought it was a really cool visual I found. And then obviously, yeah, you compare it to what we got going on right now. You can clearly see there's nothing. So, but yeah, like I think Marco or somebody said earlier, Iran at least sounds okay letting countries in that aren't fighting, them as far as going in and out. But yeah, it remains to be seen what comes out of that. And then, yeah, I'll just finish with a quick little geography for you. This is Karg Island, where the U.S. did bomb the other day. This is all the oil and the oil drums. So they basically kind of took everything out around it. But yeah, like President Trump said, he spared the oil, at least for now. But just for a little context, in case you guys were wondering where it's at, if we zoom out, you can see the strait over here. That's Karg Island. That's their jewel. They call it their crown jewel, where they got the bulk of their oil, right? So a lot of crap going on. Just be careful out there, guys. Again, I don't have anything rolling at the moment. I do have a handful of alerts. Nick's got his A1T35 code. If you guys are interested in checking out All Up Prime, so go check that out. But with that, that's the end of the day. Have a wonderful day, and we'll be back tomorrow.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.